All right, stock market big time bounce back today. You see the numbers live with 6 minutes to go in the trading session. Even with oil still well over $100, stocks are up. Now the oil price actually turned lower at the end of the day as well. The national average for gasoline, that price at the pump, it's above $4 per gallon. So that's the highest we've seen since 2022. Here comes Doug Flynn to make sense of all of this from Flynn Capital Management. Let me go to the telestrator on the national average for gas prices, because when we woke up this morning, that was kind of the headline. Say, oh boy, here we go. Right. What's this going to do psychologically to be above $4? It also to be up, as it says here, by 35%. Now, the oil price is up even more than that, by the way, as it says here, since the war began, a 52% increase. So what happens now? Trump says, he did an interview with the New York Post, this war's not going to last very long. That's the indication. He might get out of the whole thing without the Strait of Hormuz even opening up, thinks it'll open up automatically. So let's just say, for the sake of argument or discussion here about markets, that's what happens. Okay. Then what? Like, because the stock market went way up today, and oil, like I said at the end of the session, turned lower. What happens if that's what he does?
Well, I think that would definitely have an opportunity to have oil go lower, and the market is acting exactly in reverse to what oil prices are doing. That's how it's been running. I think the issue is that the average consumer is now paying about $35 more a month with these higher prices than they were a month ago. And look, if this conflict continues, or something, there's a big impact negatively, and you get back to the prices we saw in 2022 when Russia invaded Ukraine, that was over $5 on average. You know, if oil gets way up there to $150 or $200, you know, people are going to be spending $150 or $200 per month more than they've been spending, and that's real money that could be spent elsewhere. So I think that's the impact. That's why he wants to get this over and done with. I don't know how that's going to be to do, but the market is saying, well, that good news we'll take today, and we'll use it as an opportunity to buy some things that have gone down.
Yeah, because earlier, I think it was when John Bolton was on, we were talking about how the president is known to kind of react to markets and, you know, that kind of thing. And Bolton said, yeah, that was true when he worked for him in his first term. But what about the economic indicators that might be being spoken about in the White House? Said, boy, if this drags on, this is a real problem. Like, I'll just show bonds for a second, which we don't talk about a ton, but I have it here, the 10-year Treasury note. So it came down a little bit today, but still up, you know, 4.3 was almost 4.5%. There's this other indicator, it's called the Walmart recession signal, you know, by people shopping at Walmart. As you see at the top, as it's gone up here at the end, it's the highest they've been since the '08 crisis in terms of their indicators. So the idea that people were, you know, I'm sure some of this, maybe not the specifics, but some of this is getting to the president, where he's being told, listen, this could be a big economic issue. Could it be?
I feel like he does react to things. He'll come out with something. He'll launch a war when things are really good, and he'll pull back when it goes a little bit too far, and then he'll ebb and flow with it. But that recession indicator, you do have to take it somewhat seriously, because it has had the same impact over the last 4 downturns. Now, they're not calling for a recession, but it's saying people like you, Connell, that might have shopped at Harry Winston for their jewels are going to go to Walmart now. You got to sort of step down on your purchases. That's what it's showing, and it could have an impact on the broader economy. These are the signs. Like you said, not one makes all the difference, but there's a series of these things, and they all seem to stem from how long, the duration of how long do oil prices stay up. That's a negative impact on so many fronts.
I have my own recession indicator, by the way. There's no recession until Geraldo starts shopping at Walmart. Now, if Geraldo goes to Walmart, then we're all in trouble.
Let me know when that happens, Connell. Let me know.
Were you really thinking about recession, though? Is that what was in the back of your head, or you thought, no matter what happens with the war, like in the next few days or hours, the way things are going today, but were you thinking that we were getting close to that, or that was still far off?
No, I don't think so. I think the earnings are too good. The growth is still too good. You need negative growth. I don't see that. It might have slowed down, or inflation might tick up a little, but not enough to put us into a recession.
You know, what's another interesting thing? It's Tuesday. We always do the Tax Tip Tuesday with you, which we are going to do in a second, before the closing bell on Wall Street. I heard a theory today with all that's going on that all these tax refunds that people are getting a lot more could be wiped out by what we were just talking about, higher gas prices, things like that. So it all does fit together. We're getting to the point, back to the tablet here for a moment, where we have specifics from Doug on this. So we had about a minute left. Side hustles create side problems. Give us some knowledge.
You need to know about the $400 rule. A lot of people don't realize if you make more than $400 from any side hustle, no matter what it is. And this is whether or not you get a 1099. The IRS doesn't care. Even if it's cash, you need to report it. And once you make more than $1,000 net, you have to also perhaps sign up for quarterly taxes. At the end of the day, there's certain things you can do with this side income to kind of move it down and lower the taxability of it, because you do have to pay both sides of Social Security versus just any employee who just pays the one side of your employee side. You have to pay both sides, or over 15% of self-employment income. But you can do a simplified employee pension plan, that's called a SEP, up until April 15th or up until October 15th if you file an extension. And a quick example is, let's say you owe $2 grand to the federal government. Your accountant might say, hey, listen, if you put $5,000 or $6,000 into your SEP, it might wipe out what you have to pay the government. So would you rather put $5,000 or $6,000 away to you and not give it $2,000 to the government? You might want to look into that.
Thank you, Doug. Right on the money there. 4 p.m. exactly. Doug Flynn on the markets, and the closing bell rings on Wall Street.